Catch the latest market views from the experts and learn how to gain a leverage exposure via warrants with this month's commentary. Hello, this is Jamie from Macquarie Warrants Singapore, and welcome to another episode of Macquarie Warrants Market View. In this series, hear firsthand from Singapore's investment strategists as they share their views on markets in the coming weeks. For this episode, we have Robin Ho, founder of Robin Ho Smart Trade and SGX Academy trainer, who will share his views on the Hang Seng Tech Index and Tencent Holdings shares this month.
Chinese tech stocks have crashed during the escalating crackdown over the past 9 months. An onslaught of regulations have hit industries ranging from tax and financial services to private tutoring. Just this week on Tuesday, the government proposed sweeping new rules to further curb anti-competitive behavior amongst the big internet firms. They are intended to stamp out unfair competitions. The unprecedented crackdown on private enterprise has rattled global investors and triggered fears about the future of innovation in China, as well as the ability of companies to tap capital markets. Has the deep buyer finally reached breaking point? It looks like some investors are starting to abandon Chinese techs. On the charts, the HSTECH Index has continued to break new lows, coming off from a high of 11030 recorded this year to the last traded price at 6130, and that is a hefty 45% fall. The HSTECH Index is going down on a very well-defined downtrend channel trend, and it has tested its year low at 6104 today. The death cross, a closely followed sell signal, emerged on 31st May 2021, reflecting the downtrend could continue on a longer period. Prices are both capped by the downtrend channel lines and an overhead resistance at 6777. If prices breaks below the year low at 6104, it would suggest a downside target of 5710, which is supported by the lower boundary of the intermediate downtrend channel trend line. Expect prices to trade between the downtrend channel lines. Short-term bottoms are projected between 5100 to 5200, which is close to the lower boundaries of the downtrend channel trend lines. For investors looking to enter the HSTECH Index, they should wait for a clear break above the downtrend channel trend lines, and a break above its important resistance at 6777 will signal a sustained continuation in its bullish price momentum. Tencent just released its 2Q21 results. Total revenue grew 20% year-on-year to RMB 138.3 billion, 1% above analyst estimate. Adjusted EBIT rose 13.7% year-on-year to RMB 42.8 billion, and that is 5% above estimate. Since China official news agency decried the spiritual opium and electronic drugs of games, prompting Tencent to declare the possibility of banning kids under the age of 12 from playing altogether, today Tencent warned investors to brace for more regulatory curbs on China internet sector. And all these developments are weighing on Tencent stock price. On the charts, after hitting a high of 775.5 in February 2021, prices have been spiraling down. The last traded price around 433 is only $11 away from its year low at 422, and I suspect it could test that level again in the near term. Prices will be kept below its downtrend line with its next resistance at 492. If the year low at 422 breaks down, the next support at 405 is a significant one, supported by the 2 years long-term uptrend line projected from the lows on 30th October 2018 and 19 March 2020. A break below this crucial support at 405 would open the door towards a potential rundown to 374. For long-term investors looking to make an entry into the stock, turn bullish when prices breaks above the uptrend line, and the confirmation of a continued uptrend will be substantiated when price breaks out above the resistance provided by 492.
I hope Robin's insights have provided you with actionable strategies to trade the current market. Investors keen to trade the short-term moves in the market may consider doing so via warrants. Call warrants move in line with the underlying they follow, meaning if the underlying stock or index went up, so will the call warrants. Put warrants move in opposite directions from the underlying, increasing in price when the underlying stock or index falls. Take for example a Macquarie call and put warrant tracking the Hang Seng Tech Index. Here is what happened to both warrants when the Hang Seng Tech Futures Index tumbled almost 10% in 4 days, after new Chinese regulations cracking down on tech firms were announced on 17th of August. The call warrant fell 54.3%, while the put warrant jumped 65.4%. This magnified move in the warrant's percentage changes is due to the effective gearing feature embedded in warrants. A warrant's effective gearing figure refers to how much more the warrant may move in response to the moves in the underlying they track. If a warrant had an effective gearing of 10 times, it means that the warrant will move around 10% for every 1% move in the underlying share or index it tracks. The gearing effect is one of the reasons that make warrants popular, but note that gearing can work both ways, meaning warrants can also move in a bigger magnitude or percentage than a percentage move in the underlying should you get your view wrong. Investors who believe Tencent shares are now supported at Robin's short-term support of 422 Hong Kong dollars and may rebound to above its current 433 Hong Kong dollars to the short-term resistance of 492 Hong Kong dollars, can consider buying a call warrant such as the Tencent call warrant VF5W, which trades at 8.5 Singapore cents and has an effective gearing of 6.7 times. If, however, Tencent slips back below Robin's support level of 422 Hong Kong dollars and breaks further below Robin's other short-term support level of 405 Hong Kong dollars, investors may wish to use a put warrant such as 97BW, which costs 12.8 Singapore cents, to potentially profit from the short-term downward move in Tencent shares. So where and how do you trade structured warrants by Macquarie? Start by visiting www.warrants.com.sg to select a Macquarie warrant over your preferred underlying with the free tools provided. Write down the warrant's 4-digit warrant code and log into your brokerage account. You can click into your account login pages via our shortcut on the website. That will be the same account that you use to trade shares. When you are logged into your share trading platform, simply key in the 4-digit warrant code in the search bar to execute buy or sell trades in the warrant, just like how you trade shares. For further details on trading warrants and to find out if you're qualified to trade warrants, click on the link in the description or feel free to contact us at our warrant hotline. Lastly, don't miss out on the next video and exciting warrant news by scanning the QR codes and subscribing to our channels on YouTube, Telegram, and Facebook.